The simplest way to build a profitable day trading strategy come from someone that's built one, alright? So, let's not waste any more time. We haven't wasted any time. And let's get straight into it, boys. What are you going to need for a profitable day trading strategy? We're going to literally layer it up with all the layers that I use, and then you can just do whatever you want with those layers in terms of what they're going to be for you. Like the confluences, the way that you're viewing the market, all of this sort of jazz. But first, we need to power up. But at minimum, by the end of this video, you're at least going to be able to copy my strategy. Number one, what do we need? We need a bias. Because how are we going to know direction? Okay? And by direction, I mean buy or sell. Okay? And we're going to need to know this because we need to know whether we're taking shorts or longs in the market. So we're going to need bias, first of all. Okay? Oh, we're actually not going to circle that. We're going to go from bias and we're going to leapfrog over here. Then we're going to obviously need our entry. And these two are separate, in at least my case. I know some people just do entry and they actually don't look at bias, but I'm going to just do the way that I did it. So yeah, you know what I'm saying? I do bias and entry. I know some people don't and they don't see a difference, but for me, I did see a difference. So we're going to need entry as well. And what entry is pretty much just like timing and then price. Okay? So let's say we're betting on the market going up. Yeah, we're betting on it going up, but we don't just want to buy here. We want it to retrace so we can get a better price, then bet on the market going up. That's essentially what we're trying to do here. Okay, so timing and price is pretty much what an entry actually is. Then we need a different set of timings, and that's trade times. So trade times here. And this is going to be like, literally like, are you trading Asian? Are you trading London? Or are you trading New York? I don't know why I just started with a Y. Or you trade in New York. And then within those three, what specific times within those ranges, within session, are you trading as well? And I'll give you some good examples about this later. Like, we're going to break this down. I'm just going to like create the path and then we'll break down the path. Then we need news rules, mate. You're just gonna need news rules. I'm sorry. I know for those swing traders, you don't really do it as much, but I'm not a swing trader, so... Well, sometimes I hold positions for like 2 days, but I wouldn't consider myself a swing trader because some positions are 25 minutes, you know what I'm saying? So we need a set of news rules, okay? So... And I'm just gonna put text on this one. Jesus Christ, that's so small. So which news events are we actually going to be focusing on, and then what are we actually going to be doing when we see those news events, okay? And we'll jazz this up a bit and make it a bit more fucking dank. Assets. So what are we actually trading? What are we trading? Okay, and let's go back over here. Then we've got risk. So this will be broken down into evals, live fundeds, we'll call it. We'll just call it live F. No, I'll actually put it down. Live fundeds. And then live capital. And all of these should have completely different risk plans. 100%. And I'll give you the risk plan that I use for all of these three as well, because I do trade evals, live, and live capital as well. Okay. So we've got a pretty good basis here in terms of risk and all of this. And we'll add in trades per day. It ties in with risk though. Trades per day / per session. Similar topic, but it's good to outline the specifics. Okay. So we've got a nice little thing here. So we've got the bias, the entry, trade times, specific times within the session, news rules, assets, risk, trades per day. Nice. We've got a nice little bundle of things here. Okay. And now I'm going to start breaking this down a little bit deeper. RR, confluences, trade management, niche rules, such as weekend holding, question mark, New York crossover rules, and I'm trying to think of any other niche rules. Well, And what I mean by this, so niche higher time frame and lower time frame situations, I will break down a little bit more later, but what I'm meaning by this is, like, for instance, if you've got a break of structure and there's a wick in the way, but then the break of structure goes through the wick, which hits another candle which does close above it, are you counting that or are you not? Whichever you're doing, it doesn't matter. There's no right or wrong answer, but you just need to make sure you're doing the same thing every time, especially with a trading model like how I view the markets, with just doing the same thing every time, having clear definitions for each thing that you do so you don't mess up. Simplest way to be profitable, in my opinion, okay? So, let's go through the bias now, okay? How am I viewing bias? For me, I'm going to be going on the daily, the 4 hour, and the 1 hour. The daily, I'm looking at the last 5 candlesticks. The 4 hour and the 1 hour, I'm looking for market structure, so significant highs and significant lows. Okay, so let's define that over here. Let's crank this bad boy here. So for me, and you can replace this with whatever you want to do, I'm looking at 3 different time frames just to create a good average. So daily, I'm looking for PA. 4 hour, 1 hour, I'm looking for market structure. So MS, yeah? And what is market structure? Significant highs, sig highs, and then sig lows as well. And then what am I looking for in those sig highs and sig lows? I'm just going to call it minimum 3. I'm not going to write it down. Minimum 3. And what I mean by minimum 3 is, for an uptrend, we need 3 significant highs getting raised one after another, as well as 3 significant lows getting raised one after another, so you're creating that trend. Then for a downtrend, vice versa. I know what this means, you guys know what this means, so I'm just going to put minimum 3. And then what are we looking at for price action? We're just going to call it 5 last candlesticks. Because as you boys know, I'm looking at last 5 candlesticks, volume, how big the candles are, what type they are, where price is moving, that kind of jazz. So that's what I'm looking for bias. Now, one thing to note is, all of these 3 need to align, okay? So in order for me to actually be bullish or bearish on something, I need the daily, the 4 hour, and the 1 hour to be bearish, and I've clearly outlined that in my model. So if it is misaligned, then I'm not trading it and I trade something else. See how I have that clear definition for that? Just because something might look good and the 1 hour will be off, I'm not taking it. The 1 hour's off. It's not good anymore, okay? So that's what we're running here with the bias, okay? Now, let's go over to entry. So once we found out whether we're buying or selling, what are we doing? What risk to reward are we doing? What confluence are we doing? What confluences are we doing, sorry? Are we doing trade management? All of these things. Number 1, trade management. Most of the time, it's a no, but there is some niche situations where I'm going to trade manage. And that is for banned news events. So tying over to news, which is a further up topic. Banned news. What am I doing? Okay, I am pulling out 15 minutes before banned news events if in a trade. If in trade, pull out. Then 15 minutes before, okay? So I'm pulling out 15 minutes before if I am in a trade. If I want to get in a trade, okay? So if I want to place a trade, guess what I need to do? Stupid simple. What do you think it is? Wait until 15 minutes after the banned news event. Fucking hell, this is long to type on the mouse, mate. 15 minutes after. Okay? So that's my trade management. There is one more arm of the trade management leg, and that is weekend. So I don't hold over weekend because that new week opening gap that's created on the Sunday night / Monday, that could slip me. Because I don't have control however high or low it opens. That could slip me if I'm in a trade. So I take out at 8 PM every Friday. Take out 8 PM on Fridays. And I'm outlining this so that in the moment I don't have to make a decision. This is the way that I created my model. Outline every single variable so that when you're in the market, you don't even have to think, bro. You just have to follow. Okay? So that's my trade management stuff. Confluences. I'm waiting for previous session level sweep. So previous session level sweep. Then I'm waiting for a fake out. Okay? And I don't need to define these confluences for you. Okay? Because that's not what we're talking about today. We're talking about how you can build your model and how to structure it. Not what my model is and how it works, if that makes sense in terms of on the chart stuff. We're just talking about concepts here today. Then I'm waiting for a break of structure. Then I'm putting my fib tool on the whole move. And I'm waiting for a retrace. into the Goldilocks zone. Now, what type of order am I doing? Am I doing a market order, a sell stop, a buy limit, sell limit? I'm just doing limit orders, okay? So limit orders, because I like to get a good price and I like there to be less emotion involved. So what are my confluences? My confluences are previous session level sweep, fake out, break structure, fib tool, retrace, and then I place a limit order in the Goldilocks zone. We'll call it the GLZ, mate. Goldilocks zone, sweet. Now what RR am I doing? I'm doing 3 risk to reward every single time. And then we'll add one more in here. We'll just do a line like this. TP/SL. So that, for me, is the same every time. And what I mean by this is, all I think about is where my SL is, and then I just put 3 risk to reward on the TP. So my SL is 1... It's hard to kind of name this, but it's 1 to 5% of the SL is above the high if we're shorting. 1 to 5% of the SL is below the low if we're longing. So I'm just going to put 1 to 5% SL. And what this looks like is, let's just go over to the Chef JPY win that we just got. What this looks like is like this. Like 1 to 5% of the SL here is above this high. That's what it looks like. Okay? So then obviously the TP is 3RR. Okay? So on our entry, we've got trade management. We've outlined when we trade manage. We do not trade manage any other point. We've got our confluences. We've got our risk to reward. And the next thing is going to be trade times. Okay? Which sessions are we trading? We're trading London and New York session. But what times in London and New York session are we trading? We need to outline all this. So London session for Forex. Okay, so for FX, it's 8 a.m. and this is all in UK time. I know I live in Thailand, but I put my charts in UK. 8 a.m. till 30 minutes before New York session, which is 12:30, but for a certain period of the year, and you can look this up yourself, for a certain period of the year, in UK time, New York session is actually pulled back for back an hour because of the daylight savings, so that'll dynamically change as well. So for the London session, that's for the FX. Then for the indices like US 100, it's 8 a.m. till 2 p.m. Okay, that's just like a retarded 2, but who cares? So this is the trade times, pretty wide, I know, but that's just the win rate drops off after this point. Same with this point, and that's the only difference. So this is the London session stuff for the FX and indices. Then for New York session, for FX, it's New York Open up until 6:45 p.m. And then for the indices, as you can imagine, it's for New York session, it's 2:30, so New York Open, till same exact time. Okay? So I've outlined my trading times, okay? I've outlined my specific trading times as well. So I've outlined my sessions, my specific trading times, the news rules I've just told you about, okay? So we've done that as well. Now, let's get over to what the assets that we're trading. Now, for me personally, every single asset that I have ever backtested with my model has been up on the year, on the 2 year, on the 3 year. That's just how it is. Whether that be 8R or 30, okay? It's different every time, different for every pair, but it's always up. So I just had to backtest enough pairs to find out which ones were best for me. So for me, okay, on my main big accounts that actually push large capital, I trade Euro USD, Gold, XAU USD, US 100, and Chef JPY. Because these are pretty much the most consistent, best performing stuff that I found with my model. However, on my like lower accounts, like I have futures accounts like Top Step where they're so cheap that you can just trade on them and it doesn't really matter if you lose kind of thing. I also trade natural gas, silver, copper, oil, as well as the others that are able to be traded on Top Step as well. So what assets and what per account, because I have accounts that I just run EU on. You know what I mean? I have a couple 100k challenges that I'm running where I'm just running EU. I have a 100k FTMO that I'm literally past, which I'm just trading EU. You know what I mean? So find out what assets you trade in as well. These are the ones that I trade, okay? So this is the what are we trading thing. Risk. Now this is important as fuck. So lock in, homie. Evals. Evals on the 10% drawdown and 8% drawdown accounts. So like the ACGs and the FTMO. So I'll just put like we'll just put big accounts. Big accounts. I'm doing 1.6% risk per trade in the eval stage. Small and accounts. This is like the future stuff where it's like you get 4% drawdown, but it's only 6% pass. I'm doing 1% per trade, so I'm getting 3% return and 5% return here. So we do 5% return, and then we'll do, well, it's actually 1.66666666, and then 3% return here for the future stuff. Then live, so whack that here. Live, and then we'll do, well, we'll do big L, so big live. I'm doing 0.5% on most of them. Some of them I'm doing 0.7. So 0.5 to 0.7% risk on the big Ls. On the small lives, so this is like the top step and all that sort of stuff. On top step, I'm risking the same, to be honest, so 0.5%. Then on the live capital, I've been risking 1% recently. I did used to do a lot more because I just had a different perspective on the market, but I have recently changed to 1% on the live capital, and that's like in the last like 2 months I've changed to 1%, which is, I think that's a lot of risk, but I'm confident in my model, and I've got 100 trades on the account, as you can imagine, because it's a live account. Go all the way down, mate. You don't have a fucking limit. So I do 1% on my live, and that's been working quite well for me recently. I know a lot of people do drop it a lot lower, but I'm okay with this. So this is my structure for risk. And then I do max 1 trade per session per account. So if you've gotten a trade off on ACG and London session, you can still trade your top step in London session because it's not got a trade on. You know what I mean? So that's max 2 trades per day. So max risk exposure on the live is like 1% per day, maybe 1.4% depending on the account I'm running. Like I say, you want different accounts for different risk as well, but if you've just got one, I would just go for the 0.5. But I think in terms of building a model, these are at least the factors that you need to be running. However, there is a lot of work that needs to be done on the back end. So back end work. Okay, there's a lot of back-end work that needs to be done. Like, I'm talking like, 5+ years of backtesting total, bro, before you can know that your model's dialed. Like, you need to be collecting this data. Like, let's go over to some of the backtesting that we've got here. What's this? Look, this is the sort of style that I'm doing. These are the variables that I'm tracking, keeping it really simple. Know the win rates per session. Know the win rates per entry, which I'll get to. Where is this now? Win rates per entry. So entry on the 0.5, 0.618, 0.7. Different RR sacrifice in terms of trailing. If we turned off the trailing, what would we get? More backtesting here. Like, we've got so much fucking data. Like, this is not even the surface. This is just the data that we've collected in the last 2 months, bro. So you know what I mean? Just collect the fucking data, mate. Do the work that you're avoiding. That is the difference between you and a killer. Is that the killers do the work that you're avoiding and you don't do the work that you're avoiding. But I hope you boys enjoyed this video. I think this is quite valuable, to be honest, if you wanted to build your own model. But as you boys know, okay, as you boys know, I do have a model that follows all these factors. Obviously, I've based this video on my model. So if you do want to learn my model, bro, just get yourself involved in the Discord. We've got a free Discord. We're always in there helping people out, trading the model. So just link in the description. That takes you to my website, which has like a video of me teaching you the model anyway and like a summary. But under that will be a link to the Discord where you can get involved. That's everything today, boys. Use code Berg at ACG checkout. So I do trade with every single, like not every single prop firm, but all the ones that I rate. But I do have a code with ACG for 20% off. So if you're going to go with ACG, which you don't have to, at least get 20% off when you're fucking doing it, mate. It's literally a no-brainer. But I'm going to peace out, boys. Peace, love, and unity. Comment in the description below if you are from the Discord. So if you're not just joining the Discord from this video, comment down below if you're from the Discord. I am doing a giveaway with Alpha Capital Group very soon for 2 50k accounts, and I'm also chucking a mentorship in there as well. So all the comments on the YouTube videos, I'm going to be stacking up them for entries. All the people that use the code get 5 entries per code usage, and they get entered into a separate giveaway, which is just for the people that use the code. So if you use the code, you got fucking hella chance right now to get something dank, mate. But peace out, boys. I'm going to dip and see you in the next one.